you may have questions on. All right, in 1 hour. So let's get started. I'm going to share my screen and we will be off to the races. So you've already seen it. Let's get there. Why do I not see it here? All right, so there's another participant. So this might just have to do this as we move. All right, guys. So participants, I hope you don't see the participant thing, but welcome everybody to California Cannabis Taxes. Oh my! This is one of many of my boot camps that I do to help cannabis entrepreneurs and consultants that help the entrepreneurs kind of navigate the crazy area of regulation and taxation and, lo and behold, cannabis, right? It's a new world of regulation, and to make sure that you guys are prepared for it is the goal. So let us get started. So nothing is certain but death and taxes. Very famous quote, and I think one of the most important things just to kind of remember when you're dealing in this space is that, you know, you are now a regulated operator. People have access to kind of the information that you have, and being able to look at tax in a way that you want to plan for, that you want to prepare for, that you want to ensure that you are ready for, is the most important thing that you really want to be thinking about right now. So taxes, I think I'm just going to wait, guys, because there are a lot more people joining in, but taxes are going to be the thing that you really need to prepare for. So $93.1 million was collected in the state of California in the third quarter of 2018 from the cultivation tax, from the excise tax, and from the sales tax. Now, this is not as high at all as California predicted, a lot because of the slow regulations, a lot because of, you know, the illicit market that's still been thriving, but regardless, that's a lot of tax dollars, right? And so, you know, maybe you felt it on one end of the spectrum as a business operator, but again, when I think about, you know, trying to embrace taxes as much as we can and to fight for kind of the best form of taxation, we have to remember that this money is hopefully going to amazing things, and we do know that it's going to research and it's helping end kind of prohibition, which is a huge thing. So it's the one positive thing is, like, we sometimes have to embrace taxes a little bit, and as the Dalai Lama said, figure out the best way to be able to break the rules if we know them well. And so my name is Simone Samaluka-Radzins. I believe, this is my quote, nothing is certain in cannabis regulation, especially in the first few years of it, right? Yes, we know taxes are certain, and we know death is certain, and we know that cannabis regulation is here, but we know that it is so young and it's so new. And we saw this happen in Washington with a change in the tax. We saw this happen in Oregon with different layers of taxation moving about. And we can predict, or we can assume, and hopefully it's a great assumption that we're making, that this cannabis regulation probably will change too. But the point is, being able to embrace that regulation and that taxation today is necessary because, you know, you have 50% penalties if you don't pay the tax on time. You could not be able to renew your cannabis license. I mean, there's a lot more risks now in the regulated market. And so my whole thing is I help you guys really navigate the regulations behind your business, the taxes behind your business, and get you feeling comfortable of how to streamline everything. Knowing the numbers is one thing, but being able to actually make that move into the tax world is a completely another thing. So our learning objectives for today, I want to talk to you guys. We're going to go over the basics of California state cannabis taxes. We're going to talk about how taxes flow through the cannabis supply chain. We'll talk about the responsibilities of each license holder. And we're going to talk about setting up a system in your business that works for you. So every cannabis consumer in 2018 was asking, why is my cannabis so expensive? That I think everybody was used to. So, you know, December of 2017 versus like January of 2018, those consumers or those patients were seeing a huge increase in the price of their cannabis, and they didn't know why. And that's a whole nother story. But what I want to show you guys is, I think, the evolution of how the taxes work and how they are impacting that end price to the consumer. Being able to educate the consumers of where those taxes are and being able to altogether lobby, I believe, is a great way to kind of move those taxes down, because they are abnormally high and very hard to build a successful business around. So California cannabis companies, you guys pay local taxes. So wherever you are licensed locally, you have some form of a tax agreement. In Los Angeles, it's a percentage of gross receipts. It matters if you are where you are in the supply chain, that percentage. In certain areas like California City or some of the central areas where there's more manufacturing or cultivation, it's a percentage of square footage. And then with this, those are the two that I've normally seen. And then with the state, we've got sales tax, we've got cultivation tax, and we've got excise tax. And then one thing that I think is so important to remember, and I hope everybody has a 280E plan, is the punitive federal taxes, right? So IRC 280E, you're still scheduled, you're trafficking a Schedule 1 substance, you have to pay taxes on your gross profit and not your net profit, right? So when you look at all these taxes, it's very important for you guys to be looking at your numbers like every week and analyzing kind of where the flow of the taxes is going, so you can make good business decisions, because you've got, a lot more taxes than the typical business has, and being able to figure out those and navigate around them is going to be really how you're going to be able to survive until cannabis becomes fully regulated and federally legal, or 280E goes away. So the basics. I know this is very complicated. Each of the other slides, we're going to go dive deep into this, right? And so we know that there are, 3 major regulatory bodies that are regulating cannabis in California. Bureau of Cannabis Control, Department of Food and Ag, and the Manufactured Safety Cannabis Branch, right? So we've got these 3 regulatory bodies that say, hey, these are the rules, hey, these are the regulations. And then we've got one very important tax body that says, hey, here's the rules and regulations. We kind of get how the supply chain works, and this is what you owe us, right? And so that's the CDTFA, right? The California Department of Tax and Fee Administration. Everybody, if you're in the supply chain, y'all need to register with them, regardless if you're going to be paying them taxes. That's definitely a requirement that you have to do. And so what I want you to see out of this slide, there's a lot of arrows, there's a lot of colors, there's a lot of shapes. The main focus point is to understand that the distributor is really the linchpin and the center of all of this, right? So the distributor is responsible for, like if you look at this side of it, is responsible for the cultivation tax, right? And collecting it. Where they collect it, either from a cultivator or a manufacturer. We'll talk about that in a few slides. And the distributor is also responsible for calculating and remitting and collecting the excise tax from the retailer, right? So this is like, if you just looked at this side, the distributor retail relation. So retailer, in my mind, is anybody who has licensed to sell cannabis. So delivery, brick and mortar, events, those all have excise tax. And then cultivation, whoever's susceptible kind of to cultivation, obviously the cultivator, because you're cultivating it, but the manufacturer, as you'll see, also has some responsibility in the whole supply chain. The distributor is really the one who's responsible for calculating, getting, and remitting. They don't necessarily have a tax related to what they're doing, right? And then we've got sales tax, and then we've got use tax. We'll talk about this in more detail in a few slides, but really the sales tax, that's the responsibility of the retailer, right? So not the responsibility of the distributor, the responsibility of the retailer. And so when you look at why that person in 2018 is like, oh my God, why is my cannabis so expensive? And is it even being calculated correctly? We have to look into this whole evolution of how the taxes are working right now and where we think that they're going to be going in the future, right? So again, we have to prepare that this is how it is today in 2019, and probably will stay this way for a while, but really being able to navigate your role in this space. All right, so again, distributors must collect tax on, and this is interesting, guys. If you look at how the CDTFA defines certain things versus the actual regulations, it's interesting of how they even define cannabis and cannabis accessories, right? So distributors must collect tax on cannabis dried leaves, cannabis dried flower, and fresh cannabis plants. Right? So they're not collecting tax on necessarily oil, they're collecting tax from the cultivator. So this is the cultivation tax on dried leaves, dried flowers, and fresh plants. And how they define fresh plant is like you need to weigh it 2 hours after it's been harvested, right? So there's a timing component, very special to this. And then distributors also are collecting taxes on products that they are selling to the retailer that's going to go to the end consumer, right? And so that's the excise tax that we have. So bombs, buds, flowers, capsules, you name it, that all of those components have a taxable trigger, and that would be in the excise tax, right? So when you think about distributors' responsibility, 2 things, cultivation tax and excise tax. So when you think about the cultivation tax, so the cultivator is the one who's responsible for it. And you want to think about, again, whenever you're reading these things, look at specific words. So I bolded out the most important things I want you to remember based on the category and the weight of the cannabis that enters the commercial market. So if you're still harvesting and everything's still tagged in your inventory system and you haven't actually put this ready for sale, you are not needing to pay taxes on it. It's the moment, so the trigger point for a cultivator is the moment that you're actually making a sale and it enters into the commercial market. The category, it's, as I kind of talked about, right? So it's the dried leaves, the dried flowers, or the plants. And then the weight, it's not pounds. So if you're invoicing your manufacturers, or if you're invoicing your distributors and you're invoicing them upon, pounds, the tax is not based upon pounds, it's based upon ounces. And it's based upon ounces rounded to the hundredth, right? So you have to get really detailed in how you're actually going to be kind of calculating this. So in this slide, I want to give you a best practice, and then I want to show you how to do it. So first, in your inventory system, or however you're tracking things, cultivators, I want you to make sure that everything you start tracking and you start putting in your system, make sure that you say fresh plant, dried flower, or dried leaves. That's going to, if you can systematize this, it's going to make the accounting much easier. But if you're ever audited, it will be very easy to kind of have, good documentation of actually what you had and how that would translate to the sale and how that would translate to the amount that you paid. Again, we're in an environment in California where we have medical cannabis and we have an adult use cannabis. And so if you have licenses to do both, or if you have licenses to just do one, make sure that you're tagging where that flower is supposed to be going, medical or adult. And this, guys, needs to be visible onto the invoice, right? So your responsibility as a cultivator is to, yes, make as much as you possibly can and provide the best medicine, but make sure that you are tagging all of this stuff correctly and that you're invoicing either the distributor, and I'll talk about manufacturer in the next slide, with this detail. So here you can see, again, converting pounds to ounces, break down the category that you have, right? So I would imagine if you have an invoicing system, you can categorize your products. So you would probably want to categorize if it's a fresh plant, and then whatever strain that you have would be kind of the description or another category of it. And then you can lock in these prices, right? So you can automate this stuff so it kind of it calculates for you. You take the pounds, you convert them to ounces, and then you recalculate the tax. And something that's very interesting is that this tax, guys, has nothing to do with the amount that you sell your cannabis for. It has nothing to do with it. And so what I'd suggest is, you know, every sale that you're doing is analyzing the tax impact to that and how that's going to kind of affect your bottom line. Because this tax doesn't matter how much you sell it for, and at one point could be a sticky situation, right? So that's the cultivator to the distributor. So the manufacturer's happy path, right? So the cultivator would, in an ideal world, right, we all know how the supply chain works. So cultivator would sell to a distributor for, you know, packaged flower. But what we're seeing and trending so much now is, you know, branded products, capsules, tinctures, all that kind of stuff. So the cultivator will ultimately be selling to the manufacturer as well, without having some form of an interaction on a tax basis, like a triggering tax point with the distributor. If that's the case, this is where documentation, guys, is so important, and calculation on both parties' parts, right? So the manufacturer's happy path. So let's say the manufacturer, if they're buying cannabis from the cultivator, they have to collect the cultivation tax, and they're responsible for paying it to the distributor for the cannabis products that they manufactured. Right? So if they're buying, let's say, 100 pounds of flower, and they're converting that into some amazing gummies, and then they're selling those gummies to the distributor, the taxes that were associated and collected from the cultivator, they need to be, you know, distinguished and paid to the distributor. Right? So that has to happen. From an accounting standpoint, what I really want you guys to make sure that you're doing, and this is also from a cash flow standpoint, is that tax should never be commingled with any of the funds that you are purchasing inventory with, that you are running daily operations with, because those taxes are just considered in your books and records a liability to you, right? So from a cash standpoint, those should be segregated in however your cash flow strategy is working, like segregate those from any other petty cash and make sure that that's safe to go, because you already have accepted the funds, and there are no returns anymore, unless it's a failed test, like a failed lab test. So you really, those funds are really responsible, and you're responsible for those, and those should not be commingled with daily operational funds. So that's one point. The second point is, when you're actually doing the tracking, manufacturers, you're really kind of getting into the world of more of like cost accounting and tracking kind of how your batches work. And so make sure that you have a clear understanding of, if you're putting this into multiple batches, where those taxes flow. Right? So don't want to get too complicated on this webinar, but please write that down as something to make sure that you're comfortable with. And so the least happy path, or where there could be more complication, is the manufacturer to the manufacturer and the pass on the tax. It's like a game of hot potato, right? And so like, imagine this scenario. You are a manufacturer, you bought your trim, you converted that into some amazing oil, you then sell that oil to 5 different manufacturers that produce different things, right? And when you sell that oil to those 5 different manufacturers, each of those manufacturers are responsible for taking that tax. And so again, documentation, guys, is key. Taking that tax and then remitting it to the distributor, right? So again, calculation's pretty easy, guys. This calculation is just what we had done on the other slide, really kind of the same. So you've got 100 pounds, you convert them to ounces, you apply the tax rate, you understand on your end as a manufacturer how much tax you think you're going to collect, and then you would compare that actually to what the cultivator invoices to make sure you guys are on the same page. And then you keep that, and then when you are tracking that batch of, let's say, that oil, you need to have some really good books and records to make sure that you're accounting for, and you can track the movement of each of those secondary sales and the taxes that are associated with those secondary sales. That's going to be critical for you. And so that's the manufacturer, right? I mean, so just to go back and really, before we dive into the distributor, manufacturers and cultivators, really, it's really the main pain points that you're going to see is keeping track of passing that cultivation tax on to the other parties and being able to really navigate what taxes are owed and how they're going to be paid, right? Because where the risk could lie if you're a manufacturer is that if you're not really looking at your inventory the right way and you bought a ton of product from a cultivator, you had to pay, you accepted the funds, you will have those funds for a while until you're actually moving your own product around. And so this just shows how young the cannabis industry is in California, because there still hasn't been a lot of guidance there. But from a cash flow standpoint, that would be something to be analyzing, I think, internally, is how are our purchasing, if you're a manufacturer, what type of purchasing are we doing from our cultivators? And does that make sense for our cash flow? Similar with cultivators. Another interesting point, guys, is that the cultivation tax is based upon the weight. We all know that cannabis weight changes, you know, as especially, I mean, obviously flower. And so one of the things to note is when you are actually calculating the tax and when you're weighing that, right? So a better practice would be to have that, not to start calculating the taxes like 15 days before the sale, but have a system in place to make sure that that net weight that you're doing from the cultivation standpoint is the closest to it to kind of minimize your tax. And then similarly, cultivators and manufacturers, you want to be along the same lines of the actual weight that one's buying, right? And I'm sure you have that internal process already in place. All right, so for distributors. So distributors are the ones that can transport cannabis legally, right? They can collect and remit cannabis excise taxes and cultivation taxes. In my mind, the distributor has the most risk in the entire cannabis supply chain, mostly because they're dealing with all of the other parties, but because of the taxation, right? There's a lot of error that can happen, and being able to analyze all the movements in, the movements out is something that every distributor should really be focused on. And distributors, they can sell to another distributor, a micro business, or a licensed retailer, right? So those are the kind of the happy paths to get towards our excise tax. So one of the things that we have to always remember are the reporting requirements. So a distributor has a lot of reporting requirements, and the reporting requirements for cannabis excise tax is for the products that are sold or transferred to a cannabis retailer, right? So again, the trigger point here, as it currently is read, is that it's if you're selling or if you're transferring, and that's when you would be wanting to collect the 15% excise tax. Now, again, there's nothing that states that the retailer needs to pay you immediately for the excise tax, but the trigger point is a sell or a transfer. So again, when you're analyzing your cash flow, if you're a distributor, you really want to make sure that you have really looked at your cash flow and the impact. If you know you're liable for, and I'll talk to you about the numbers in a second, for X amount of excise tax, and you still haven't been able to collect it from the retailer, you could face a 50% penalty if you don't pay it within 30 days of the reporting period end, right? So again, reporting requirements for the distributors, that's a whole almost separate department of your business, is just to make sure that the compliance actually works. And so right now, guys, it's 15% cannabis excise tax in California. So there's something called an arm's length transaction. And how I look at an arm's length transaction is if you're just going and trying to sell your products, distributors, to any retailers, you don't have any related parties, you would just sell this to anybody else on the market. That's how I look at if you have an arm's length transaction. Could you sell this to Simone? Could you sell this to Bob? Do you have any relationship with them? No? Okay, then you really have an arm's length transaction. And it's important to understand, your relationship with the retailers, because how you calculate your excise tax is going to be very different if you have an arm's length transaction which means that you really don't have much relation at all, versus a non-arm's length transaction, meaning you're a related party, right? And it's interesting when you actually look at the tax implications. So imagine you're this distributor. You bought your products, you've determined your wholesale price, right? And you're in the middle of going and knocking on the retailer's door. You start getting some amazing sales and you're about to start the invoicing process, right? You know you need to calculate the excise tax. How do you do it? So how the CDTFA looks at it is they look at, okay, well, what's your wholesale price? So what's the price that you're selling? And then we want you, if you gave your retailers any discount, so if your retailer was a preferred customer, if your retailer, paid early, if, you had a special like promo discount, whatever, we want you to add that back in to your wholesale price, right? So they're saying, no, you can't get away with discounts, add that back in. And then if you charge any transportation fees to your retailer for these products, you have to add that back in as well. So essentially you're paying taxes, you're paying this excise tax on the discounts that you gave and the transportation that you provided, right? So they look at how the CDTFA will look at it if they come in. They'll say, oh, well, you say your wholesale cost is this, but you gave a discount, you had some transportation fees. So really your true wholesale price is actually a little bit more. And so that's the base to even start this excise tax calculation. So you look at the true wholesale price. And then what you do is, so every 6 months, the CDTFA says, hey, this is the average market rate that distributors should apply when calculating when calculating the excise tax. And so I call it the forced markup, right? So it's the markup rate. And so they're saying you need to mark up your wholesale cost, or your wholesale price to 60%. And so here's that. So forced markup of 60%. So recalculated that. So, 60% on 1582 is 2,500. And that number is where you apply the cannabis excise tax, right? So then I've got my excise tax of 15%, and then I apply that there. And that's the excise tax that the distributor would collect from the retailer. And that's why cannabis is so expensive. Like in the end, I almost want to stop there and be like, that's why it's so expensive. But that's how we're getting the excise tax calculated. So again, just to recap on this, wholesale price of what you're selling it for. But if you're giving promos, if you're giving discounts, you got to really assess that. And transportation, again, if that's on that invoice, they're looking at transportation and making you create that markup based off transportation costs. And then once you've looked at those, apply that 60%, which is good right now. We haven't had any change. It'll be evaluated in 6 months. That's how you get your excise tax. That's a lot of work to do. The system's not hard, so don't worry about the system. But I think the impact on the bottom line is kind of where you're going to feel it. And so I wanted to even kind of make sure that you guys are all aware of this, is please, in the impact of discounts on your bottom line, it's something I would love everybody to analyze, and I'd love to help you analyze them. Short-term promotional incentives, discounts for early payment, and preferred status discounts can actually negatively impact your cash flow, right? So if you're thinking about offering a discount, really go back and run the numbers to make sure it makes sense. Because when you're offering a discount, your whole concept is that you want to generate more sales, right? So the promotional incentive is to kind of, increase your sales, but watch what that, you'd really want to do an analysis of, okay, if I give this much discount and I, discount this product this much, I still have to pay taxes on it. And am I actually generating more sales? Would what that money spent be better spent on marketing activities, on other activities to generate more sales, right? So again, your business very well. You know why you're giving these incentives. If it's trying to collect cash, I get that. But again, kind of thinking about these are the rules that we have. How can you adapt your business model to make sure that you can figure out a way where if you are doing a discount or a promotion, how that can be more collaborative and kind of rework the framework so you might not have it negatively impact your cash flow. And so the happiest path, guys, is if, and the most beneficial, honestly, from a tax perspective, is if you don't have an arm's length transaction. If the distributor is the retailer, if it's a micro business, if it's a related party, because the tax, guys, it's just calculated off of the sales price. So it's like because everybody knows what's happening. It's the same system. So it's, you know, what was the sales price? What excise tax? That's the total that needs to be remitted back to CDTFA. So a lot easier, no transportation, nothing of that sort. Again, I'm not sure where y'all fall in the supply chain, and I'd be curious to know. So please put it in like the comments, but really this is kind of the happiest path when it comes to the distributor. And then, so somebody asked kind of about promotions, right? So promotions and discounts, they're a little bit different. You know, promotions are giving away promotional activity, promotional items, launching kind of a new product, not giving a discount, right? So discounts is one thing, promotions is another. And so the CDTFA looks at promotions. So I created this kind of flow chart for you. So if you have got let's say you're deciding to do a promotion. If you're reselling it, so if it's basically to say, hey, retailer, we're launching some new products. We'd love for you to resell this. Here you go. This is a promotion. The trigger point is that the retailer has to send, like they have to sell the cannabis to the end consumer. So there's an excise tax. Excise tax means, is there a sale to an end consumer, right? So for that, you have to pay excise tax. If it was considered for like marketing, you want to look at the promotional price. So let's say if it's for marketing, so you are wanting to get your retailer into some of your new products, they don't, you know, it's going to take them a while to push it to the floor. That is when it would be considered for marketing. First, if it's for marketing, you need to make sure that you label all of those products not for resale. Again, creating that audit and compliance pathway, framework, and roadmap, that would be a whole nother process to determine promotions, right? So if you are doing those promotions and they're for marketing and they're not for resale, then you need to label those products as such. Then what the CDTFA says is that, okay, well, if you're selling the promotional items at 50% less than they cost you. So let's say that they cost you, you know, $10 or something like that, and that's your cost. It's not your sales price, and you're giving them away or you're selling them to the retailer for like $1. Well, that's 50% less of your costs. So you would have use tax apply. Guys, I'm no crazy tax specialist here. Like this is where I'm like, I can navigate you and help you walk through the framework. That's when you want to go see, you know, a California CPA. And I know a ton, so if you need some, let me know. But then generally stating, if you're not selling it at 50% less than your cost, then you're going to have and be susceptible to sales tax, right? So promotions, again, you've got all these crazy pathways that unfortunately lead to all tax points, right? So again, with your promotions, this is your discounts, be mindful, and when you're doing the promotions, why you're doing the promotions and what your expectation is from those promotions and how they're going to help you build your business. That's, I'd say, the biggest takeaway when it comes to promotions. I know you're trying to move your product. I know you're trying to, talk to the customer and trying to kind of generate more sales. But I would say thinking about different ways to do that also could be much more beneficial and give you more bang for your buck. And then we have the retail responsibilities. So once the distributor has given the lovely cannabis and collected the cannabis tax to the retailer has a lot of work still to do, right? Beyond the minimum compliance that they need just to be up and running, they're responsible for actually collecting the excise tax from the customer. They have to collect sales tax, and they have to collect local taxes from the customer. So the retailers, I think, are the ones who really face the, oh my God, why is my cannabis so expensive on the day-to-day, right? So it's the supply chain, very end of the supply chain. One compliant thing you guys have to have in your invoicing to your customers is that you need to have this somewhere stated. The cannabis excise taxes are included in the total amount of the invoice, right? And so you can, if you want, you can bake in the excise tax into your price. So let's say that you decide to sell a vape pen for like no, that's too cheap, for like $60, and you just wanted to include the excise tax in there. So all prices that are at your end consumer scene, you're never going to collect the excise tax. You need to make sure that that is written there. So if you get audited by the CDTFA, you're like, no, but we've been collecting it, and this is the amount that we're collecting. Again, it's kind of just for the audit trail, and also for you guys to be able to analyze the amount of taxes that you're doing. For sales tax, again, sales tax is actually, let me go here, is actually calculated after the excise tax. So sales tax is on all cannabis and cannabis accessories. What you want to do here, and it's just, a little bit absurd, but the sales tax, this is assuming we're in Los Angeles, is calculated on after excise taxes have already been accounted for, right? So it's the last thing that needs to happen. So again, you see an impact on what was 125 is now 157. So it's pretty big. And so the retail responsibilities, again, remit your excise tax to the distributor. So that's for excise taxes. And then remit your sales tax to the CDTFA. So again, remember in that bigger map that we saw at the beginning, one tax goes to the distributor, one tax goes to the CDTFA, and then local taxes go to your local authority. Right? So again, the local is kind of, we're talking much more on the state level here. Your local might have a completely different schedule. It might have a completely different calculation. Like that is your local thing. And if from the retail level, it's a percentage of the gross receipts, well, then you definitely want to be able to either decide if you have to pass it on to the customer, or if you would want to take that hit by increasing your price. I think that would be kind of the thing that you would have to do. One very important thing that I forgot to tell everybody, but I think it's the right time, is that cannabis excise tax, guys, is on cannabis, right? It's not on the accessories that are related to cannabis. So if you are selling if you're selling vape pens, cartridges, oil cartridges, and like the pens and the batteries that are associated with it, you are not required to pay excise tax on all of the parts or the accessories. You need to make sure, like this blew my mind. We looked into a client and they had been paying this, and we're like, what? You don't have to do this. Like, you don't have to pay taxes on, you have to pay sales tax if you're a retailer, but you don't have to pay taxes on your cannabis accessories if you're a manufacturer or if you're a distributor, right? So like when you're calculating the excise tax, you do not need to, you need to break out like, okay, this was related to cartridges, this was related to the hardware, right? So you don't have to pay taxes on your hardware. That hopefully everybody knew that, but if you didn't, I was shocked that, people actually had been calculating that. So, final part of this is that I really wanted to give you a few tips to setting up your system in your business that works for you. Again, depending on how big you are, depending on how many people you have on your team, and depending on your willingness to embrace technology, setting up a system is going to be very different for everybody. Right now, I know you're incurring so many costs and you're probably feeling overwhelmed by this, how much taxes are here. And so when you think about setting up your system, think about setting it up as the framework and the groundwork for you to really be able to build and understand, right? You want technology to work for you. You don't want it to work against you. You want to, if you can, get away as much as you can from paper and try to at least use some form of these systems to help, right? And so the number one thing, guys, is taxes are an endpoint to everything. right? You calculate your 280E taxes based on the results that happen for the year. You calculate your excise taxes based on a sale. You calculate your cultivation taxes based off of a sale, right? And for the cultivation taxes, you have to make sure that you understand the categories for each of the things that you're selling, because that amount is going to be different. Right? And so all of those relate to numbers. And if you don't have an accounting system in place or a method that works for you that allows you to be able to track this stuff and track it quickly, you're not setting yourself up or your business for success, right? And so when you think about getting your accounting system dialed in, like two main things that I really want you to focus on are, where do your products live and breathe, right? Like if you have products that you're selling, because I know everybody is, where are they? And can you, in the current system that you have, associate some of those tax rates to those products, right? So you can allow that process to kind of work for you, right? So that's like the number one thing. The number two thing from an accounting perspective is, what kind of systems, from your vendor controls to your customer controls, are actually kind of integrated into your accounting system, right? So when you think about dealing with vendors, a whole portion of doing your vendor management and asking them and making sure that they're, aware of the taxes that they're responsible for, that you're doing purchase orders, that you're doing invoices, that you have a methodology for actually collecting, the taxes. And similarly with your customers, right? Like, this is, for the cannabis supply chain to be successful in California, really, accounting is the number one thing. And then secondary to that are the relationships that you have in your accounting world. So, sales is derived from your customer relationships and how you invoice people, right? Your purchases are derived from your vendor relationships and kind of your purchase orders, and if you have to collect taxes, the taxes that are associated. So it's really important to get your accounting systems dialed in and your systems in place to be able to navigate this. From a books and records perspective, the CDTFA says, hey, you only need to keep all your books and records and everything that we need from you for 4 years. Well, the Bureau of Cannabis Control and all of the other licensing authorities, that's 7 years, right? So you have to have 7 years of, your great invoicing, 7 years of detailed invoicing to drill down to what you're selling, how much you're selling, the taxes, and to whom. There's a lot more compliance that you're going to want to be doing. And the easiest way to do it is through your accounting systems, right? Second point of advice or insight that I'd like to share is, now is the time to get granular after you've got your accounting systems in place, to really analyze your price and your cost per unit. It's mind-boggling to know that if you're a manufacturer and if you bought cannabis from another manufacturer, that now you have to carry in some excise, some cultivation tax with you, be able to track that cultivation tax to your batches, and then also be able to build a profitable business, right? And so when you're building your business, if you don't have optics, and this more impacts, it impacts everybody in the supply chain, but you really want to have optics on every unit cost and every contribution margin or your profit per unit. You want to be able to understand that, because it's going to help you predict your cash flow. It's going to help you forecast better, and it's going to be able to allow you to understand where you are actually not performing well. If you're looking at things not on that detailed level, you might think you're doing very well, but then when you drill down, and you don't want to drill down to your accounting until the very end of the year, but when you drill down onto actually your batches and your costs of something, you actually might be in the negative, right? So make sure that you're getting a system to start analyzing your price and your cost per units, and that you're looking at that on a weekly basis. Minimum compliance. So this is looking at the rules and regulations, and this is looking at, the minimum you need to be successful into this cannabis excise tax and cultivation space, right? So as I said, document everything 7 years. 7 years is the record retention policy, I would suggest, because it's what we have to do. Maintain good books and records. So when you dial down into what you need to be actually maintaining, what the state actually wants, obviously shipping manifest, vendor contracts, customer contracts, invoices by SKU, any movement that's been happening, how you calculate your taxes, right? So there's so many different components of what needs to be maintained in your books and records. So determine kind of what your books and record policy is and where you store them, where they live, and what's missing right now, right? Because the whole concept of compliance is you internally do it. So when an audit inevitably comes, you say, hey guys, here's all my stuff. It's all good. Here you go. Get it in writing. The CDTFA is an excellent resource. There are a lot of free videos. There's a lot of great information there. And if you ever have a question, they have free resources. So you might not even need to use a CPA if you don't want. But get it in writing. So if you have something that's particular to you and you don't know how to do the accounting, you're confused about the tax, you just need some help, send them an email and make sure that you ask them clearly like what the problem is in their opinion, and then they'll send that back to you in writing. Keep that writing as evidence of why you decided to do that. That's called audit support, right? So that's definitely something that you want to make sure that you're keeping. Oh, the next one, know the reporting period. So again, we got that 50% tax, or that 50% penalty for distributors if they're not paying their taxes on time, right? And so reporting periods, you need to know them and understand when you're responsible to pay them. So payments are after every, like 30 days, right? So the next month, so if you have a reporting period that ended on 12/31 of whatever, like let's say of 2018, your reporting period is the 30 days afterwards. 30 days are the next month, but I believe it's 30 days. Maintain the proper permits. So at the beginning, a lot of times you might be confused at what permits you're supposed to have. Now, the distributor is responsible for having the cannabis tax permit, right? That's a distributor thing, but everybody needs to have a seller's permit, and they need to do their due diligence, especially if you're doing wholesale and then you are selling to a retailer, to make sure that your retailer actually has a seller's permit as well. It's also, I believe, a requirement when you get your application. And then, of course, to get any of those things, you need to register an account with the CDTFA. Not that hard to do. Maybe takes 15 to 30 minutes, depending on how much paperwork you have. But again, even to apply for a cannabis license, you need to have your seller's permit. And then again, I want to highlight that there's a 50% penalty if your taxes aren't paid on time. Right? So make sure that you're paying those, because also on the renewal standpoint, if you have a few dings, you might not be able to renew your license. Now, my thought is that you need to do a little bit more, right? So that's like the bare bones. But again, you're building something as a cannabis business, or even as a consultant helping cannabis business, you're building something to grow. You're building something to flourish. And this is a hard period of time right now in California, but it's going to get better, right? We know it's going to get better. History repeats itself. We can lobby for some change. But what you want to do is you first want to sit down in your business and you want to assess all of the internal and external risks that are impacting your business. From a tax perspective, from a vendor perspective, from a customer perspective, from a regulatory perspective, from an employee perspective. Like, this is how you truly build compliance and a system that works for you. Because when you can assess what you're threatened by, then you know how to mitigate the risk, right? So like, you assess the risk, you determine what your risk tolerance is, like how likely you are to, encounter the risk, and what your risk appetite is. And then you build a plan that is aligned with the compliance that we know. But the compliance guys that we know is that you have to pay taxes and you have to pay them at a certain time. So really where the magic happens is that internal kind of system that you're building. So then you want to really analyze what's working and what's not in your current business. So, you can't do this on this webinar. This is some homework for you. Go in and really look at, oh my God, we have to, have specific protocols when we are selling. Like if we're a cultivator and we're selling to a manufacturer, what controls do we need to have in place to make sure that the taxes that we're paying are the right ones based off weight, that they're correct, that we're, making sure that we've passed on the liability, but that we also are collecting our money on time, that we're, building something sustainable, right? So analyze what's working and what's not. And then, what's working, continue to do that. Like if it's working, make sure that you document it if you haven't documented it. But if you have figured out that a lot of things that aren't working in your business, develop a plan and improve what's not working. And that's then, guys, so we talked about SOP. We haven't talked about SOPs, but I'm sure you've heard about them too many times in the California cannabis market. But those SOPs are a tool for you, actually. They're a tool for you to say, okay, well, I had to comply, so I had to do these basic things in my procedures. Now, how do I make those procedures work for me and work for my business and work for, ultimately more efficiencies? So if you have more efficiencies, you can sell more and make more and build more, right? So once you've analyzed, assessed, and improved, that's when you go and standardize. You don't want to standardize something when you've never really tried it before, right? Like you're still trying it out. Standardizing is after you've figured out, yeah, okay, that makes sense, and you're okay with it. And then the biggest thing that I've seen is, you might be able to set up your system correctly. You might be able to improve things. You might have the accounting in place. But at the end of the day, if your staff isn't trained and if they're not aware that you need to weigh the cannabis, if you're a cultivator, right before you give it to the manufacturer to save the most on taxes and document it, and you need to make sure that it's to the 100th and there's a certain process, well, you missed the process didn't work, right? And so a lot of what happens is that staff are unclear of what they're supposed to do, or confused or overwhelmed, and you really have it upon yourself to make sure that you're training them to make sure that they're doing it the right way, right? I mean, this goes on every aspect of the supply chain. Again, where you are, your risks are different. Where you are, your impact's going to be different. Your systems, though, beyond the nuances of them, they should kind of be set up the same. And then again, monitor what's working and then correct it. Monitoring means developing a checklist, guys. Develop that checklist, to checks and balances if you're calculating excise tax right, checks and balances if you're how you're moving inventory, checks and balances how you're doing things every day, checks and balances of how you're actually doing your accounting flows. Like that's the monitoring control that I think a lot of businesses have yet to implement. And I would say focus, once you've done all of those other 5 things, on that. And then the last point of any compliance plan is that you really want to make sure that once you've monitored and once you've trained, that you correct anything. It's fine. I mean, the whole point of this is that we, like I said, at the very beginning, everything in cannabis regulation is uncertain. We know everything's going to change, right? And so what you're doing right now is like you are adapting your business to the rules and regulations and the taxes that exist, and you're providing a framework and groundwork for your business to be protected, right? To be defensible. And so when you do these internal assessments, there's nothing wrong if you find an error. In fact, every business will find errors. It's how you correct and improve that will make your business better. And so I wanted to offer everybody, if you want any help on compliance today, I can help you kind of build that roadmap, and just holler at me at the end of this webinar at simone@liveconsulting.com, or check me out on simonecr.com. But I'm really excited that everybody's here and listening, and I just hope that you were able to learn something, and hopefully you can put some of these things in your business, because it's so exciting to be in the cannabis space and to be able to be part of this revolution. And the one thing that I just don't want to see happen is you good guys that are watching this tax webinar that really want to do well is to go out of business. And really being able to embrace the compliance and being able to embrace the excise tax and the cultivation tax and all that stuff is just one part of it. The biggest part is investing in yourself, investing in that roadmap, investing in how you're going to do it, and just going with it. Focusing on sales. So I'm going to stop the screen share, and I'm going to open it up for questions if you guys have any. Do you want to put the questions in the chat? You can put them in the chat, or you can unmute yourself. It's just that we have a lot of people on, so I want to make sure that we're not talking over each other. But what questions do you guys have? No questions? It means you are all experts. Experts to train. Thank you, this is great. Can you give a few other examples of related party for distro-retailer relations? Okay, so I would say depending if you can, so what a related party is, how you define it, I have to go back and honestly look how the state defines a related party, but how I define related parties working in the space is if there's similar ownership, if you can cut a deal pretty quick because the ownership's the same in some form or the other, right? So I'm not sure if it's going to be a 20% ownership that needs to be the same, but it would be for sure if you're a micro business. So a micro business is like that is the related party. That's like the gold standard of related parties. But let's say that I am, you know, a bigger business, MedMen, for example. MedMen probably has a distribution site and they have retail outlets, right? So, you know, they're branded all under the same thing. They have the same systems. They have the same back-end team, corporate team. Like that to me is an obvious related party. If you had to dive deep into, you know, the intricacies of ownership, that's going to be one thing, and then influence on the price, right? So again, if you know that you can influence the price for whatever reason there is, that to me is an obvious related party. Alexa, did that answer it? I hope it did. And then I know that, okay, perfect. And then I know Mifa had questions. So my other thing that I haven't figured out the best solution for is really promotions and discounts, right? So I would love to know if you guys have been doing promotions, if you've been doing discounts, and how that's impacted, you know, your bottom line, because my thought is it's very hard because the retailers are the ones that talk to the end consumer, but really as a cultivator and manufacturer, you probably have marketing plans or sales plans in place to talk. But it's curious if you could analyze how much you spend on doing promos and what you're getting out of it, and if you are giving discounts and what you're getting out of it, if you could actually do that the analysis and figure out if that makes sense or not. Because my thought is when you add all that stuff back, it's ridiculous that you have to pay taxes on it. Okay, so then Mifa said, what is the best way to document samples, invoices, and manifests? Okay, so yes, everything needs to be, so guys, like we're not on seed to sale tracking yet, but every bit of cannabis that moves needs to be included in a shipping manifest. Like that has to happen. Right? So yes, in the manifest, I don't have one in front of me, but you would just have it in the manifest and then mark it as, especially if it's a sample and it's for marketing purposes, make sure that you have not for resale, right? So that's like one thing, not for resale. And then you'd want to distinguish that as well on your invoicing, right? So ultimately, the thought is, how do you make your shipping manifest and your invoicing basically the same thing, right? They give us the sample shipping manifest, but if we can make our invoicing kind of similar to that and, you know, make sure that we have the same exact fields, the same exact kind of components, you want to put it on both. Where you will want to make sure you're okay and that if you're automatically calculating taxes is, as I mentioned, so if you're doing a promo and you're doing a promo that is, if you are doing a promo as a distributor, right? And the promo is going for resale to the end consumer, you still have to pay excise tax, right? But if it's not, where you're gonna need a system, Mifa, is to figure out, okay, well, what was the cost of it? And what am I giving it to them for? And do I have to pay sales or use tax, right? So that to me is kind of the back end behind it. But manifests and invoices are perfect because we know we have to account for and track the cannabis. Remember, that's the biggest thing. I guess there's one last thing is like the state needs to know where the cannabis is. They need to have a pathway for it. Right now, we haven't implemented anything, but when it's going to be implemented, they have the authority to be like, well, let me see 2018 and how did it go, right? So the state just wants to see where it moves. The CDTFA wants to say, hey, did you pay us enough taxes? Because guys, they predicted, I want to say about $500 million in taxes. And they definitely didn't get that. They're like at, like, I want to say like less than 300 by Q3, right? So they want their taxes. So I hope that helps. And I think that's it. So guys, thank you very much. And please, I'll shoot everybody a follow-up email, but I would love to help you if you need any help. And I hope that everybody has a fantastic day. And go to simonecr.com and make sure you subscribe to my newsletter. And then I'll give you a link to some of my other courses that I teach. So thank you again, and I will check you all later.